All right, let's
Happy.
start with a starter for 10, which I've been asked a fair bit this week, is how do you set up a UK limited company for the purpose of purchasing property?
Good question. So it's actually fairly simple in the UK. For those of you who are from the UK, you'll know that we have Companies House, which is the authority that basically handles anything related to limited companies in the UK. And there's two options here. You can go with an authorized provider to help you incorporate. So that would be like a tax store. You could also incorporate yourself with Companies House. Now, it's a little bit more tricky if you're overseas because of some of the identity requirements. What you would do is you basically tell Companies House, this is the company that you want to set up. You need to pick a name, which is very important. You have to pick a good name
That's the most fun bit.
that you're going to give. And then you register that name with Companies House, and you have to choose an address as well in the UK. So if you're living overseas, this is where it's very useful to use an incorporation partner, an accountant, a firm like us, where we would essentially handle that for you, that virtual office address. So all the letters that Companies House or HMRC would send will go directly to us, and we basically scan and send it to you as the company. Now, once you've got that, your name, your address, we're then looking for like shareholders, how many shareholders you have in the business. And the good thing is here you can be quite flexible. So if you have a family, you may want to put husband, wife, some children on the shareholdings. And then from a director perspective, a director, essentially they run the company. They're responsible for what the company is filing. So they have to review the accounts, review anything that goes out. That is generally speaking the person who's involved with the investment, their landlord, who will be reviewing the details. And you can also have a secretary. Sorry.
I was just going to say, what's the difference between, in terms of sort of voting rights or rights to profits or whatever, what's the difference between the director and the shareholders?
Good question. So a director is primarily there from an administrative perspective. They, in theory, they don't have any rights to the profits. They don't have rights to receiving a dividend unless they're also a shareholder.
Yeah.
So what we see individuals do is they have different classes of shares, which allows them to potentially add in shares which allow individuals to vote, and then potentially for kids, shares which do not have that voting privilege attached. So that enables families to provide shares to their children, mitigating some of the IHT implications as well with the different classes of shares.
Sorry, I was just going to ask then, yeah, so what would be the benefits of adding children initially? The benefit would be the fact that you don't have to pay any stamp duty selling them the shares at a later date. Is that the main benefit, or is there anything else?
That's the key benefit. Now, stamp duty on shares is quite low, 0.5% compared with stamp duty on a property, which is another kind of benefit of using a limited company. But we'll talk about that in a little bit. But yeah, that's a key benefit as well. It's the flexibility that you have when you're operating a limited company. If you did need to issue more shares or transfer those shares, it's not as industrial of a process than a conveyancing and having to kind of go down the land registry route. Because the ownership of the property is always going to be the same. It's the company.
Understood. Okay. Yeah. So I think you've got, and that's sort of when people ask a lot of the time, I'll say you can do it yourself on Companies House, and they sort of say that sounds like a good idea. I'll give it a go. But I think personally, it's like managing a property. Yes, you could manage it yourself if you wanted to, right? But in reality, why not just pay a professional a little bit more money over what you would do on Companies House, and know that it's going to be set up properly with the correct codes and all of that sort of stuff. So I'm a fan. And also you're busy, you want to keep life simple when you're trying to work a job that's not property and raise a family. So I think personally, I always think it's better to use a traditional accountant or someone such as yourselves. I think that's different again, isn't it? Because a traditional accountant would charge you a bit or a lot more than you guys would charge, and then sort of doing it yourself is a little bit below that again, right? So yeah, I think best to work with people like yourself.
True. I think as well there are some of the benefits of working with providers like ourselves and other accountants is normally the incorporation might be within a package. So you get the incorporation free, but then you work with that accountant ongoing. So there's a bit of an investment from our side or from an accountant's perspective, but with the mindset that you'll be a client for years to come, right? So often actually it could be cheaper in the short run to use an accountant or service like us, because the fees in terms of setting up the company might be lower. Now, as well, on that point, it is very important to use a professional, because especially when it comes to companies, everything's public. And two, HMRC and Companies House are switching off their solution to file anything with them. So you won't be able to file accounts with Companies House from April 27, I believe it is. And then for HMRC, I believe it's April 26. So they're both stopping their corporation tax filing and accounts filing. So it's important to just have a professional that you know and trust that can help you with the filings ongoing.
What does that mean exactly? Does it mean that if you're an individual, you can't do your own tax returns? It's got to be done by an accountant. Is that what you mean?
Exactly. An accountant or third party software would need to file it. And that's where third party software is often a service. It's not just software. So includes that review, includes that support. And the reason is a lot of accounts were filed incorrectly with Companies House. And we've seen a lot of clients, a lot of landlords who've filed their own accounts and then have come to us and said, hey, like, can you do my next year's accounts? We're thinking, wow, everything that's filed last year is actually incorrect. You've not accounted for a loan into the business, that you need to account for these things to enable you to withdraw this money tax free. And there's a
Yeah.
few different aspects that super important to get right when filing accounts, because as well, it's going to be public. You want to make sure that a lender were to review your company, they're also comfortable with what they're seeing online.
Yeah, which is important, I think, because obviously, if you're getting lending on a property via a company, they are looking at the company's accounts as part of that, as well as yourself. But that's part of it. So I think that's how you set up a company. And then I think the second question that you would normally get then, or we would normally get, is, okay, how do I do it? And what would be the benefits of it? And I know there's heaps of benefits that go along with setting up a company, right? And often it depends on what your plan is. Do you already own in your personal name? Are you living overseas? Are you going to move back to the UK? Whatever it may be. But what are the sort of headline benefits of, say, the top three, to put you on the spot, in any order, or in your ranked order, whatever you feel like doing? The top
Yeah.
three benefits of owning by a company.
So for me, number one is mortgage interest being fully allowable through a company. And this is, if you just got one or two properties, it may not make much of a difference if your rental income is under the 50K mark. As it goes above that, if you've got more income in your personal name, you could have pension in your name, you could have other interest and dividends, etc. But if you've got income in your personal name, your mortgage interest relief is restricted to 20% of your mortgage interest. Whereas in a company, it's treated as a full expense, which is super important if you plan on using mortgages. So that, I think, is number one. Whether you're in the UK or you're living overseas, it's a key benefit for our landlord clients. And the second one is the flexibility that you have when it comes to inheritance tax, when it comes to legacy planning. It helps you be more flexible with share classes, with moving things around, compared with if you have something in your own name. It's going to be a lot harder if you did come to legacy planning, things like that in the future. And then this is where it does depend on your situation. Now, I think we always ask our clients, right? It depends on your long-term goals as well. But
Yeah.
another key benefit is if you were to ever sell the property or sell the company, I guess I kind of gave it away. You can sell the company instead. You don't
Yeah.
have to sell the property, which means as an investor, it's quite attractive, because you're then paying stamp duty at that 0.5% instead of at 5 or 7% for an overseas landlord buying additional property. So the key benefit there as well is if you're looking to sell it on in the future, you can often actually make a little bit more because those numbers are factored in. The final thing is you're flexible with how you pay yourself. So let's say that you wanted to keep the money in the business. It's great. You can use your retained profits to purchase another property, and you can do that within the same company, or you can set up another one and loan money into the other one. So you're not using your personal funds anymore to purchase properties. You can almost create a cycle to reinvest your funds. Separately, if you wanted to keep the money, let's say, right, I want to take this money out, and your only income in the UK is from your limited companies, all your dividends will be tax-free because it's treated as disregarded income. That's also great because you're not paying any income tax on it
Yeah.
in the UK.
Yeah. Yeah. No, I think that's one of my favorite things, favorite aspects of the company is the fact that you can be creative with paying yourself. You know, you've got the director's loan, you can take dividends, and you can charge yourself. You could charge interest on that director's loan as well. You know, so if you reached a point where you bought two or three properties and you had three lots of deposits in the company at 150, 200 grand, you could charge yourself an interest on that and take that in a tax efficient way as well. So I think
Yeah.
that's one of the things I find quite interesting about the company approach.
Yeah, I think it's important for clients to look at the overall kind of picture of, one, are they going to use mortgages? Super important question. And often the answer is yes. And then also looking at what other sources of income they have in the UK.
I know, and I think it's sort of just thinking then three examples of people that I've spoken with this week, and so if someone's listening to this thinking, well, where do you start with it? How do I know if it's for me? So we had a married couple, both have UK tax-free allowance, 25,000, but they have two properties already that's over that. So they're looking at a third. What's the best approach? They're never going to move back to the UK. Well, in my opinion, that one's got to be in the company, because any income from that property is going to push them higher into that 20% personal tax bracket, right? So in that instance, the company makes sense. Another example, couple, no property, but they're probably going to move back to the UK and work. So even though they could take advantage of the tax-free allowance now, if they move back to the UK and work, it's taken up, right,
Exactly.
with salary. So therefore, ring fence that, and don't use your personal allowance. And then the last instance was a lady that was really sort of passionate about wanting to set her children up and pass the properties on. And so I think in that instance, regardless of what's going on elsewhere, do it via a company, because it's going to make that side so much easier. So that's why to your point, you were saying it's very specific and depends on your goals. I think people have got to look at, yeah, what would be the key questions to ask yourself then, do you think, if you're considering whether to use a company for property?
Exactly that. It's asking yourself what the long term goal is. Is it to pass it on? Is it legacy planning? Is it keeping the income for today? Is it to use it on like an ongoing basis? You want to withdraw the money out of the company or reinvest it for further properties? Asking yourself around mortgages. Do you want to use mortgages? Do you want to return back to the UK?
Which, by the way, absolutely, you should use mortgages. Why would you buy one with cash when you could buy three with mortgage?
Yeah. No, of course. I guess we also see some clients that are very risk averse, might be the word, where they just want to put the cash somewhere but not pay interest. And
Yeah, fair.
I think it's worth always using leverage if you can. But I guess there are always individuals as well who would prefer not to. And I guess in those cases, if you're just looking at the income, you don't get the mortgage interest relief from
Yeah.
using from in your personal name. So it could be worth just investing in your name.
And actually, talking about using a mortgage, I was chatting to someone recently, and they sort of had a revelation. They were thinking, okay, I'm going to try and pay down my mortgages, overpaying as quickly as possible. And then they called me and sort of said, hang on, why would I take this money that I'm paying 4.5%, 5% on, and pay it down as quickly as possible? Why wouldn't I use the money that I would pay down and invest that somewhere else with a higher return? And I was like, exactly. That's the point.
Yeah,
Don't pay it off. Never pay your mortgage off.
that's it. That's it. I try and tell my girlfriend this all the time. She always wants to pay down the mortgage instead of investing it elsewhere. We can make 10 to 20% elsewhere instead of the 4 point. Yeah. I have this
And that,
conversation every day.
yeah, and I think it's nice though when people sort of, and it obviously depends on how risk adverse you are, and if you're not going to sleep at night because you've got a big mortgage, then your sleep is worth more than earning money. But I've got another sort of question. So we've looked at how you set it up, what the benefits are, the questions you should ask yourself if you're considering it. I was again having a conversation with a different person. All of these people are different, believe it or not. And he was sort of saying, right, I was thinking about buying in all these different places around the world, and I've come back to the idea of buying in the UK purely because it's unsexy, it's stable, it's boring. To be fair, it's not a Dubai 67% in 5 years. It's not a Georgia or a golden visa approach, but it is the place to buy if you want a property paid off in 20 years' time to get a good income from it that's going to have appreciated. And anyway, so he came back to the point and said, right, if I want to try and get up to 10 properties, say, as my nest egg in the UK, he couldn't quite sort of get his head around the tax element. So he said, okay, if in, you know, 10 properties, what would that be? Call it 5 million quid. And so he's put in £1 million worth of director's loan. He then sells half of those properties, say. And actually, I'll text you this. It was the guy we were sort of texting
Oh,
about
yeah.
last week. And he said, okay, so then I've got my director's loan of, what did I say, £1 million. And
1
then you've
million.
got 2.5 million quid of cash, say, including the million director's loan, 2.5 total because you've sold some properties. He sort of said, well, I'm still going to have to pay tax on that 2.5 million if I want to try and pull it out. So, and we agreed that, and he's going to be living and retired overseas in a jurisdiction where there is no tax on foreign income. So, what would be the tax situation there if you were trying to plan it out? You can use director's loan. How else could you get the money out without sort of paying heaps of tax? Obviously, you pay the corporation tax that you need to pay on profits, but after that, what's the best way to get it out? Can you get it out? Is it stuck in there?
Good question. And as we were discussing, right, the corporation tax will always be paid because it's UK property. But then once that's been paid, the retained profits, let's say once the companies have been sold, and the corporation tax will also be paid on if there was a gain with the property. Any of the retained profits can be taken at tax free, provided it's the only source of income that this individual has. Now, if they have other UK income, then that might be using up some allowances. But the retained profits taken out as a dividend will be treated as disregarded. Now, these rules, in short, I always find it hard to really explain how this works, but essentially, you can choose to use your personal allowances in the UK, so that's 12,570, or you can choose to treat your interest or your kind of dividends as disregarded and then they're not taxed in the UK, which is why we say if you don't have any other UK income, because then what we do is we run a calculation, right? Is it worth using your personal allowances of 12,570? Or is it worth treating your interest and all your dividends as being disregarded? Now, in this case, I think it will always be better off to use it as kind of disregarded, even if there was other income in the UK. So
Yeah,
that's the calculation that we do from a tax perspective to work it out. Now, for most people, where we see this a lot would be smaller amounts, right? When they're taking out their dividends from their company, but they also have some rental income in their personal name. That's the main case. But in a case like this, with 2.5 million being taken out, that will be tax free.
yeah,
Another option, though, worth mentioning is that the properties can actually be sold as a company itself, as an investment portfolio. If you're selling to another investor who wants to purchase all five, they just buy the company.
yeah,
And then they're essentially selling shares. So again, there's no capital gains on shares in your personal name if you're living overseas. Now, those rules may change in the budget with exit taxes and other taxes being,
no,
being rumored, but as of now, no tax on shares if you're living overseas. So that could also be a great way to take it out without even paying the corporation tax of selling the properties, right? So
yeah.
can keep a little bit more of that.
That's interesting to know. I didn't, realize that last point. And I think so. The moral of the story is there, and this is sort of what I said to him is, there's always a way you can do it. It just depends how you do it, and you've got to construct it using everything available to you, director's loan, tax-free allowance, the dividends, the fact that you're living overseas in a tax-free jurisdiction, whatever it may be, but ultimately once it's tax paid corporation tax, it's your money, right? So you could send it
Yeah.
out, send it anywhere. And talking about Rachel Reeves there, everyone's favorite topic at the moment, we are going to be doing a post budget review, aren't we, later in the month? So
Yeah.
if you're interested in hearing about all the negativity and all the new taxes and the fact that the property market's going to not be worth it anymore, then tune into that one.
Have you got any estimations, any rumors, any thoughts that you think might change, that you think might happen at the budget? And then we can
I
compare it.
I think personally, and it's probably not the best thing to say as someone that is a property investor and helps other people do it, but I try not to pay too much attention to it, to be honest with you. It's sort of what will be, and you see it all the time. Oh, this is going to happen, this is going to happen. This might happen, and it might happen, but then also at the same time, we might have a new government in shortly after that who will just reverse it. And, as I think Kemi Badenoch said, she was going to get rid of stamp duty on homes, I think is the key thing. So primary residence. So I think personally, yeah, it's not going to be good. I don't think. I think it's sort of going to do the opposite of what the UK needs. If we want to ease housing pressure for first time buyers, for renters, rents are going up, then we need to encourage a positive environment for landlords, to encourage people into the market to create good stock. And I don't think that's going to happen. But also at the same time, they say things and then they don't happen. And another, so yeah, so I try not to put too much stock in it, and then I'll see. Let's see what actually happens, and then we can plan based off of that. But yeah, I'm going to sit on the fence. I'm not going to. I'm not. I'm not going to. What about you? Have you got predictions?
I think they might be going down the route of the national insurance reduction with an increase in income tax, which actually will hit landlords and hit those living overseas, right? Because non-resident landlords, you're going to be paying income tax, not national insurance. And that 2% will increase the tax take for the government on landlords. I think I was at a landlord conference last week. There was a lot of debate on this, and it's an easy one for Labour to introduce without still trying to keep with their working people promise, which I don't necessarily agree with. I think they should make it easier for people to invest in UK property, make it easier for people to start businesses. But I think that's the rumor that I could see most likely coming in. I can't see wealth taxes. I,
Yeah.
I hope not, and I hope not exit taxes as well. Otherwise, I would be getting the first flight out.
Well, that's it. I mean, I saw a friend of mine sent me a meme, and it was Rachel Reeves holding a trophy, I don't know, an award that says Dubai Real Estate Agent of the Year.
Oh
You
yeah,
know, it's, she's she's forced so many people out, and they've all gone to Dubai. And I think it's just the opposite of what you need. You need an environment that encourages business, that encourages people to work, that encourages people to invest, that encourages people to come up with the new ideas, and
yeah.
attract talent. So, what would the national insurance? What would that look like for landlords? Do you think?
The rumor at the moment is there'll be a 2% cut of national insurance, but then an increase in income tax. So for employees, or what I think kind of Labour deem as working people, it would then be the same. There's not a change. But for
Yeah.
landlords, that would be a 2% increase in tax, if that makes sense,
So
because you don't pay national insurance on rental income.
yeah. So it would just be reflected in a higher tax bracket. Is that how it would be brought
Exactly.
up?
So just higher taxes paid in your personal name. And this could be another benefit, right? To
Yeah.
using a limited company. Very unlikely that they would change corporation tax rules for companies that hold property. It's it's a bit more tricky to analyze, right? What does this company do? Is it owning property? Is it rental income? Whereas in your personal name, it's easy because this income is split out at the moment. It's on the tax return. You've got rental income. You can easily change that number.
Yeah, I see what you mean. So yeah, I guess, but there you go. There's a bit of a workaround already. I guess that'll push even more people into the company route than the
Yeah,
personal ownership route, which I think it's actually all the changes recently have forced landlords to become a lot more professional. You don't really get, or you can't be successful if you're just accidental, or I'll buy a few in my own name. And I think that's good for the industry because it's making people treat it professionally and look after tenants properly. But yeah, I think it'll probably push more people that way.
agreed. And changes like the Renters' Rights Act as well is certainly impacting a lot of landlords to, if they weren't already, to seek support and yeah, turn their portfolio into a more professional business. And similarly, another reason that just popped into my head around setting up a company is you avoid the changes around MTD, which start next year.
Someone mentioned it to me the other day, and I said, "What's that?" And obviously, it's something I should have known about. And I will just say, I did know what it was, but I didn't know what the acronym was. So,
Right. So this is the tax changes from April 2026, so next April. MTD, Making Tax Digital, is the acronym,
Yeah.
or a lot of people think is making it more tricky, making it more difficult.
Yeah. Make tax
Essentially,
difficult.
essentially, the aim of it is that you'd be filing quarterly updates. As a non-resident landlord, there's a bit of a delayed start, so it would only start from April 2027. And if you're earning over 30K, and then from April 28 if you're earning over 20K. But that 20K could be if you have one or two properties, right? So it's the threshold means that you would need to file those quarterly updates if you're owning property in your personal name. There's also some rumors that it could drop down to 10K in the future. What that essentially means is with the quarterly updates, you have to file using software like Taxed.
Yeah.
And you basically just tell HMRC is my total income, total expenses, and my net profit. And then at the end of the year, you file your normal tax return, your end of year submission that includes everything, your residency, your number of days in the UK, your other sources of income, any other credits and deductions available to you. But it's more admin. Now, you could also argue, right, it's making people more professional because in theory, you should be tracking your income and expenses anyway if you're running it like a business. So there is a benefit there. But then at the same time, that increased admin, that increased time could be avoided also if you set up a limited company. And then you're down to filing your annual accounts and your corporate tax return anyway.
Again, I think it's another, but I think I think it's another thing that's going to push people towards companies and making, what was it, making tax doable? What was it?
Making tax digital,
Digital. It's, yeah, like
digital
you
or
say, making
difficult.
tax difficult. I mean, it's just four more bits of admin on top of one other bit of admin. And saying to a friend of mine recently, they were saying, they do their tax return. What's the benefit of using someone like yourself? Well, it's just peace of mind and less hassle. I think it's worth sort of paying to. Obviously, now you have to, but I think that aside, it just makes your life easier, and anything that frees up your time so that you can focus on other things, I think is better. But
I think as well, it's knowing that you have the support there when you need it. It's knowing that you've got a tax expert, right? You can speak to if HMRC send you that letter. If you get the letter from HMRC with the crown on it saying something's gone wrong, and you're on your own, it can be quite scary. So
I,
it's
I
having
got
it's
one.
having kind of both.
I got one. Found me and sent me this manifesto of information that I've got to fill in. I mean, it is quite scary. So it's been carried around in my suitcase on all my trips for about 8 months now, and I've been meaning to do it. So yeah, it's not fun.
No, it's not. It's not. I think that's also where like what we do quite well is it is made a lot easier and keeping the records online. It's something you can do whilst you're on the go. You can do it whilst you're waiting for your flight back in the next couple of days. I think that's where the traditional model of filing it with HMRC or an accountant, it's a bit more long-winded, takes time, but you can get your taxes out the way whilst you're waiting for your plane.
Yeah, well, I think I've been sort of, you think on how you can improve efficiency in your own portfolios and what you're doing. And I think I think, move away from the traditional accountant approach soon because, I've always valued the fact that you can just pick up the phone to them, but ultimately you still have to compile the stuff. If you're not very organized like me, and you don't sort of file stuff as it comes in, you sort of end up once a year doing all this admin. And so I think, yeah, there's got to be a better way to do it. And on that note, I guess we've kept it nice and short. We've covered some good points. How do you set up the company? What are the benefits? What are the questions you should ask yourself? A couple of case studies. How can you get cash out? The making tax digital or difficult. If people want to find out a bit more information on yourselves, where's the best place to go and check it out? We'll put a link to whatever you'd like us to below, website or Instagram. But where's the best place for people to read a bit more about you?
Our website's great. Our website's a great starting point that really highlights what we do, especially for non-resident landlords and expats. And I guess just a bit about us, right? We are expat tax experts. My background was at a Big Four tax advisory firm in the expat tax team. So we've worked a lot with individuals who are living outside of the UK but have UK tax filing obligations, whether it's on a property perspective or it could be pensions, it could be trailing income from the UK, whatever that is, not just property, but we can support with the whole range. I think that's where we're not just the software where you do it yourself. We are that hybrid approach where the software is going to prompt you how can you save on your tax bill from a property perspective, and we'll suggest different expenses there. But then also from a residency perspective, how can you be most efficient? And then you've got the tax experts you can always speak to. So similar to if you just want to speak to a tax expert, you can, and that option's always available to you. So yeah, the website's a good starting point. Sorry, long answer for that.
No, no,
Just
not
the
at all.
website.
And I would add to that. I would say, yeah, for people that haven't not familiar with you, we did another episode. Maybe we'll put the link to that below, and that was a lot more sort of about the business background and yourself and where you came from. And I think one of the interesting points from that was the fact that you used to work with, a similar company to yourselves that did a similar sort of thing, but you didn't like the product and the way it worked, and you set this up. And I think that's where a lot of good businesses come from. It's actually, okay, I've used this, I've highlighted a problem, and I'll go and take it and make it better. And I think that's what you guys have done. So yeah, you have experience working in the tax side, but you've also had experience in trying to do this from an investor perspective as well, which I think is useful to know that you're dealing with people that have done it before. So yeah, any closing thoughts?
Just from a tax perspective, super keen to see what will happen in the next couple of weeks. I really do hope it's the rumours are kind of doom and gloom, and then it will come after the budget and actually think, you know what, it's good. This is incentivizing investment in the UK. But I think super important as well, right? Because of all these tax changes coming out, whether it's using a limited company, MTD, the budget, now is such a good time to review that overall tax exposure and look at how you can reduce it, make tax efficiencies here and there. Because if things are going to get worse, it's savings of that 1, 2, 3% will actually make a difference when it comes to tax time.
Yeah, it certainly compounds, doesn't it? So, okay, well, thank you very much. We'll look forward to catching up after the budget, and we'll pick that apart. And hopefully, as you say, it's not as negative as everyone seems to think it's going to be. And guys, it never is. It's never as bad as the headlines say, because guess what? Negativity sells papers. So let's all relax a bit. We'll catch up in a few weeks and debrief on it. But Arjun, thank you very much.
Perfect. Thanks, Callum. Thanks, everyone.